Today, we saw the stock market rallying on up, essentially squeezing the shorts with very little pullbacks throughout the day. If we actually look on the 30-minute candle, one red candle, two red candle, three red candles going all the way back from 5:30 this morning. However, I also want to share with you guys something that has not happened since 2008. And is this a warning sign for what is coming up next? Now, if we come over and look at the fear and greed index, right now we're sitting at 31. We are getting closer and closer over to neutral territory. So are we going to finally see the pendulum starting to swing, maybe even all the way back over into greed? When we come over and look at how the indices fared across the board, the Dow was up 486 points. The NASDAQ was up 457 points. S&P 500 up $108. And the Russell 2000 being up 3.82. However, what's even more impressive out here is when we look at advancing issues versus declining. We had 82.1% of issues advancing on the day. Then as we come over and look at the sectors across the board, only one sector was in the red. That was consumer defenses, and it was only down marginally, down negative 0.59. By far outpacing everything else today was technology. And if we come over and look at the XLK real quick, the technology sector, notice what we have right up here, right? That swing point for that larger A to B equals C to D pattern. That would go something like this, the A to B leg, the B to C leg being the corrective leg, and now we have a price target at about 217.70. Well, if we come over and take a look at Apple real quick, Apple today also on the move back up. We take a look at Nvidia today, also up $3.72. However, after the bell, we do have some earnings coming out. We have Intel, we have Alphabet. Now, if we look at Intel after hours, we can see not such a great reaction to their earnings announcement. However, we take a look at Google. Google absolutely crushing it, up $6 at the moment, was up a little bit higher. However, we haven't heard the earnings call yet, and that's going to be important because when we look right over here, are we going to see something like this where American Airlines pulled its 2025 forecast for economic outlook because they say it's way too uncertain? And again, with all the tariffs and all the other madness going on out here in the world, are we going to start to see some of the technology stocks doing the same thing? Now, when we come over and look at something that has not happened since the great financial crisis, we come over and look at U.S. existing home sales, weakest March since the great financial crisis. Now, when we look at the home sales news out here today, we came in at 4.02. They're expecting 4.14, which was still less than previously at 4.27 million. Now, tomorrow we do have some economic news, which at 10 a.m. we're going to get revised consumer sentiment, followed by revised inflation expectations. And when we come over and look at the most recent investor sentiment survey, we can see the bullishness this week drop down once again. It is now sitting at 21.9. The bears did drop off a little bit as well, 55.6, and more traders fell over into the neutral category at 22.5. Now, when we come over and look at the volatility index, we see the VIX was down today, down 6.96%. If we look at this on the 5-minute chart, we see the VIX basically all day long just trending on the way down. We got a little bit of a pop here, but then ultimately it continued to cascade lower. We look at the dollar index. Even the dollar index today was down 0.48%. Then we look at the precious metal gold. Gold once again was on the move up higher, but with gold, we have nothing more than an inside day. The low was higher than the prior day's low. The high was lower than the prior day's high. So tomorrow we can expect a breakout or breakdown from this area. And if we're looking at a chart of gold, notice gold does have this gap right up here. So are we going to see gold potentially running up, filling this gap, and will we produce a lower high, which could set up an ABC pattern, bringing gold all the way down towards the 61.8 and potentially fill in that gap that was left behind over here on April 11th. There's 3 amazing prop firm deals out there. Apex Trader Funding right now, 90% off all evaluation accounts passed in one day, and special pricing for the 150, 250, and 300K accounts. My Fund and Futures, you can get the starter plan for only $82, and Take Profit Trader, 30% off all evaluation fees, and best yet, no activation fee. Now, when we come back over and look at the SPY real quick, we talked about that A to B equals C to D pattern, which we've almost been able to validate that pattern. MACD indicator crossing on the way back up. Then on the 4-hour chart, we see the MACD indicator trying to push up through that zero line. However, I'm still a little bit concerned that we have 2 gaps right below us. Now, does that mean we have to go down right here, right now and fill the gaps? No, I was banking on the fact that we're likely going to come down and fill the first gap and then maybe rally back up And you know what? I was simply wrong. We talked about this today during the live stream. And if you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. Today, we gave away another 50K Take Profit Trader account. So now if we look right here, notice what we're getting in the SPY. We're getting right into minus development area. So do we maybe chop around this area, or do we finally start to pull back? If the SPY is going to start to pull back from around this area, I'd want to grab a Fibonacci retracement from the swing low right over here and pull it right up here to the swing high. And notice that 50% level comes very close towards that gap being filled. But we got to ask yourself, if the market's going to start to pull back, what is going to be the catalyst out here to get the markets moving lower? Now, also going back over to the daily chart, notice the volume today. The volume today was relatively low. So today, it wasn't like the buyers were overly aggressive. It was just a simple fact that we had no sellers in this market. Then as we look at the 30-minute chart, here's the ABC pattern that we were watching to play out. And we can see we came down, basically tested a swing point where we never got further into it. And then once we violated this high right here, it was all systems go and the market just rallied on up. Now I'm going to classify today's volume profile kind of as a P as in Paul shaped profile, which means if we start coming back down below value area low today at 542.61, expect the lower third of the range to be retested, then maybe back down towards gap support. We breach that, then we're coming all the way back down, filling that first gap right down here about 526.98. Now, when we come over and look at the futures markets with the 4-hour charts and the weekly profiles, notice we have this potential for this A to B equals C to D pattern. Here's the B point. We've already broke above the B point. So now that pattern is essentially validated. We do have an untested point of control right up here. Then when we look left, we also have that gap that's been left behind. Now, in order to fill that gap, we need to make it all the way up here to about 5584.50. Now, the question is, do we start to pull back a little bit? Did the market do nothing more than a look above, and then we're going to start pulling back up and maybe form some type of consolidation in this area, or maybe even pull all the way back, fill this gap, maybe overshoot these lows, and then go ahead and rock it on the way back up? Right now, the market is fueled by optimism out there that the tariffs are not going to be nearly as bad. Now, we come over and look at the 30-minute chart with the daily profile. There's a couple key areas I want to focus on. We can see value area high came in at 55.24.5. The point of control is 54.97.5, and value area low is going to be about 55.50. Now, tonight, if we start breaching above value area high, then we start coming down. I want to target the point of control. But I also think that sometime tonight or tomorrow, we're going to come back and kind of fill this area in on the chart, meaning the market will pull back and kind of trade back and forth within this area. Now, if we do start to pull back tonight or early tomorrow, we want to grab our Fibonacci retracement, grab it down here from the low from today. Then if we end up going higher today, we just simply have to drag this a little bit higher. But if we use the current price as a high, notice where the 38% comes in at, right near that high volume area. The 50% level comes in right near this minus development area, and that could potentially set up a much larger ABC pattern on the way back up. But just note, if we start retracing below the 61.8 and we really start breaching the 78.6, then watch out. We're probably going to flush the lows today. Then that would basically open the door that we're likely going to come right back into Wednesday's gap and potentially come back and fill that gap. Now, today we did have quite a large range of 186 points. So we'll see if tomorrow ends up producing a D as in dog shape profile. Quite often after a large ranging day, especially a one directional day, we'll see a D as in dog shape profile, which is basically a back and forth type of day in the stock market. Now, when we come over and look at the QQQs real quick, notice what we have over here on the daily chart. Here's the anchor VWAP right up here from all-time highs, the blue line. Where are we at? We are right there. Are we going to be able to punch up and out through that area? The MACD indicator is still below the zero line, and we do have a bullish cross. So there's a lot more room for this MACD indicator to potentially run. Then as we come over and start looking at the 4-hour chart, what do we got going on over here? MACD indicator trying to cross above the zero line. And as I'm looking at the profile up here, some of the key areas I'd want to focus on would be any of these high volume nodes. The first one coming in about 483.92. The next one about 489.91. Keep in mind, we have these two glaring gaps right down below us. And on the 30-minute chart, we can see today basically gapping up once again. The QQQs had a gap up. So now we have 1, 2, 3 consecutive gaps on the way up. And I got to be honest with you, anytime I see 2 or more consecutive gaps, highly probable we come all the way back down and fill the gap. Today's profile shape was a P as in Paul, which is also indicative of a short covering type of rally. So if we really start breaching below value area low, I want to focus on the lower third of today's range to be tested. Then down here towards gap support. If we lose this gap support from Wednesday, then watch out. We're probably coming all the way back down and filling the gap. And to be honest with you, there would be nothing wrong with that if indeed the market did take that path. We can see if we grab our Fibonacci retracement, swing low to the current swing high, notice the 50% level is right in the middle of Wednesday's gap in the 61.8. If we made it down that low, would be low enough to go ahead and fill the gap. If the market retraced down towards that area, that would do nothing in terms of messing up this corrective rally that we have going on. Now, as we come over and look at the NASDAQ futures real quick, let me go ahead and clear this chart off. We can see we have that large gaping gap out here in the profile from earlier this week, but we also have a case where we have another A to B equals C to D pattern, which plays out something like this. Now, notice where that pattern completes, 20,042.85, which is right near another untested point of control. We had two of them above us. One of them we were able to take out today. Also, if we zoom this out a little bit, our Fibonacci extension tool once again, and we measure A to B, B to C all the way down to here, we have another ABC pattern up here about 20,316. We have an ABC pattern that just formed out here today inside of a larger ABC pattern. So we have some upside targets. However, has the market gone a little bit too far, too fast? As we come over and look at the 30-minute chart with the daily profile, notice that value area high is up here at 19,403. We just wicked above it. Now we're currently below it. We have the point of control at 19,258.5. Then we have value area low at about 18,997.00. Now pay attention tonight. We start breaching 19,403. I do not want to get short unless we come back down below that price point. Then I'd want to target the point of control. Then I'd probably want to target this next high volume area somewhere in the ballpark of 19,162. Then anything below that, I would turn my attention towards value area low or this whole minus development area that really runs anywhere from 19,044 down here to about 18,905. Now, if you guys like to see an updated video on the pros and cons of Take Profit Trader, there is one new pro and one new con in this video. Make sure to watch this video right here.